It wasn't easy and it wasn't smooth, but the Dow closed at another all-time high today. It's 39th of the year. Well, perhaps equally notable, the Dow crossed the 16,000 mark for the first time ever, and the S&P scored its own first, piercing 1,800. Neither index held those levels long, though. Stocks got a lift following encouraging comments earlier today by William Dudley. He's the president of the New York Federal Reserve Bank. Dudley says economic growth will strengthen next year and build even more in 2015. The jobs picture should improve, he says, and so should consumer spending. But late in the trading day, a wet blanket got tossed, and it came from none other than activist investor Carl Icahn. He told a Reuters summit that he's, quote, very cautious on equities right now, calling some companies' earnings a mirage, and says the market could easily have what he calls a big drop. Well, it wasn't big, but the market did drop after that. Here's a look at the final numbers for the day. The Dow, which surged as much as 67 points higher initially, finally closed up 14, good for that fresh record. The Nasdaq fell 37 points, dragged down by slumping shares of Apple. The S&P was off 6. So why are some market players like Icahn growing very cautious while others say, party on? Seema Modi takes a look.
The first trigger? Home sales began a round of fresh economic data on Wednesday, when we'll get the October number. If it's weaker than expected, the staying power of the housing recovery will be questioned. Also this week, inflation readings. On Wednesday, it's the Consumer Price Index, and on Thursday, producer prices, both expected to remain low. If not, and inflation is higher than expected, concerns will grow that the Fed will be more open to scaling back or tapering its monetary support. Another potential catalyst for a sell-off, earnings. This week we hear from the top retailers, Home Depot, JCPenney, Target, and Gap. Commentary from management could provide a window into holiday season expectations, a time when retailers in general do about 20% of their business for the year. There are also a lot of long-term headwinds, including Europe. It's still dealing with deflation and tepid growth, impacting the bottom lines of multinationals in all sectors. And then there are valuations. Remember those? As the market rips through new highs, stocks get more expensive. The momentum names powering the rally, like Netflix, Best Buy, and Tesla, all up better than 200% for the year, can only run so far. That has some market watchers worried, and some not.
We still think the market is attractively valued at these levels. So new highs are fine as long as earnings are continuing to keep up.
However, according to HSBC, valuations in most markets are slightly above their 10-year averages, prompting some analysts to disagree with the notion that the market will continue to move higher. For Nightly Business Report, I'm Seema Modi.